Hi everybody, Alex Deployer from Expert Forex. Welcome to the first video in this trend trading course that I'm presenting. It's going to be a pretty practical course. I have done an introduction in a previous video and it has the same page as this one, except that this one doesn't have that one for the first video of the course. The previous video is an introduction. Please watch that video first before you watch this video. In this video, I'm going to be focusing on the entry aspects of certain trades, and we're going to touch on some exit and some transactional management aspects, but we'll deal with them in future videos. I want to just get the entry side going, and I also want to get a lot of discussion going on what I'm going to be showing you now, so that we can use those discussions and questions as guides as to the content of the future videos. So on your screen you can see a chart, and it's a fairly empty chart. I have put the zigzag indicator on. Normally it would be empty, but I have put the zigzag indicator on because I realize a lot of traders are not that good at seeing trends, and the zigzag indicator is a nice one to show you the trends. You can make it more sensitive or less sensitive, but where you find the zigzag indicator is you go into custom indicators. I've clicked on indicators, custom indicators, and it's right at the bottom there is the zigzag indicator, and that's how you get it on the chart. I formatted it as a green line, a green thick line, and you can format it any way you want. So as I mentioned in the previous video, what we do is we take a blank chart like this and we say, what are the transactions we would like to have done looking at this particular chart? And without any restrictions, most traders would go for the long candles. You see these long candles. There's a long candle. There's two long candles. A few more there. There's a long candle. There's a long candle. A long candle there and a long candle there, and so on and so on. So the beauty of long candles is that you enter them and the price just goes in your favor straight away, very quickly, and it gives you a lot of time to move in trailing stop, break-even stops, and manage the transaction. So rather than saying what technique are we going to impose on the market, what we do is we say, all right, we want to catch long candles. Let's have a look at ways that we could have caught these long candles. So we almost start from scratch, completely clean, no preconceived ideas about trading and all that type of thing. So what I'm going to do today is I'm going to focus on one trade, and we might only focus on the entry aspects of that trade. I'll see how time goes, and to give you an idea of building a checklist on what are the kind of things that you would need to look at when evaluating a trade. So in the course, the practical course, in a group live, we would look at this chart and we'd say, all right, where's the most ideal trade that there is? And obviously the longest green line, which is in fact that line there, is the longest one. And let's start there. We're going to do all the other little ones there because they're as important. But let's start with the big one, and we say, okay, how do we catch this trend? And there's two aspects here. You can go for 100% of the trend. So how do we enter there and how do we exit there? Or you can say, which is the better way, is you can say, let's say the top 20% of this trend or 30% of this trend is the entry point, and the top 20% or 30% of this trend is the exit point. Make sense? So we're not trying to be perfect. We're saying we'll give ourselves, and then in the middle here, the sort of 30 to 40% level here is the tricky area, as I mentioned in the previous video, where you've got to decide, are you going to double up, or are you going to half down, or are you going to cash in, or are you going to continue, or what are you going to do? So that's the tricky end, and we might not cover that today, because let's focus on entries. So in the class we then say, all right, let's find reasons why we would enter in this zone But let's start with the most optimistic one and saying right at that point, how could we enter this trade and exit at that point? So and I'll just increase the size a little bit so we can focus on this transaction a little bit. Okay, so the first thing to do is we say, all right, let's throw a few ideas around. How could we have entered at that particular point? Now, one of my favorite starting points with any transaction are channels. So the first thing I would do is I would draw a channel, and the channel needs 3 turning points, and you always go to the last 3 turning points. So if you go back, that's 1, 2, 3. So I'll start at 3 and I'll draw a channel line over there, and we then draw a parallel line there. All right, so that was pretty close, wasn't it? I mean, that's pretty close to a channel bounce. And in fact, if I increase this, it's just, dear, doesn't like the scaling here, but let's just have a look at that. In fact, the channel also gives us quite a good exit point over there, but we're not looking at exit points right now, but I'm just mentioning. So the channel trading would have given us a near miss. But if you do trade channel trading properly, what you do is you actually trade 5% inside of the channel and 5% inside the channel on this side. So you give the channel trading an area of margin. So in this particular case, I'm going to say that we came pretty close at entering this deal on a channel trading basis. So let's go to the... Okay, so now we've finished with channel trading. Now also note, and I'll add this to the exits, that channel trading provided a fantastic exit potential down here. So channel trading was good for an entry up there, but also a good exit at the bottom. So channel trading can give you entries and exits. Yes, my boy. Yes. Right, so let's wipe channel trading out. That's overs cadovers. Now, one that I don't use often, but is almost, I can almost see it happening here, is Fibonacci. So Fibonacci, and let's hope, oh dear. Okay, Fibonacci is a tool, and I'll just go in here, and it's not an indicator, it's an object. There it is, and I'm just going to change the color to edit. Okay, fib levels. Yellow is terrible, so I'm going to make that dark blue, and let's have a look. All right, that's fine. Okay, that should help a lot. And then show, and okay. All right, so where were we? Okay, so now traders of Fibonacci, we realize that this is the start leg of Fibonacci. So there's the start leg, and then there's the retracement leg, and then there's the extension leg. Now again, can you see this was quite a close miss on the 50 line, but the 50 line is in fact not a Fibonacci level. The 38 and the 61 levels are. So what happened, what we can say here is that Fibonacci actually worked here, but you would have got in most probably at 61. You would have got in there, which is not bad. You're only giving a few pips away. And what is really good about this one is that it actually almost to the pip gave us the target for this trade. Interesting. I don't use Fibonacci much, but in this case it did. All right, so now we've got to add Fibonacci to the entries, and we've got to actually entries and exits, and we have to add channel trading to the exits. Right, so that's Fibonacci. So again, and what I'm doing is I'm actually showing you different techniques on how to get into these trades. So Fibonacci, what you would do is you'd enter on the 61 there. Sometimes people enter at the 38. The Fibonacci guys aren't really sure about which one to take. Okay, so I'm going to get rid of Fibonacci now. Fibo, and we delete that one, otherwise the chart will get too busy. Right, now what I'm going to do now is I'm going to just throw on a moving average. Over the years, I'm now talking 20 years of trading, I have found that the moving average of 4 offset or shifted by 4 provides the best trading moving average. Now that's just me personally, and you know, you can change that to 5 offset by 5, or you might not even have an offset or whatever, but I have over the years found it to be quite reliable. So I'm going to put on my old favorite 4 by 4 moving average, and we'll zap it in there, and you can see it creates a barrier between the bull area and the bear area, and the bull area and the bear area, and so on and so on. So that's why I like this this particular approach. So if we now look at this trade, moving averages would not have got us in very early, but it would have got us in most probably over there, because the rule of moving averages, you only enter when it closes on the other side. So if it goes down like that, you see it didn't close on the other side, and then it opened there and then closed, and it must probably closed on the other side of the moving average, and that's most probably where you would have entered, or certainly on the open of the next candle. So that's most probably a better guide, the open of the next candle. So there's our entry, and it would have taken us all the way down, and it would have taken us out over there. So we would have caught maybe 70%, 80% of this particular move using moving averages. So we need to add moving averages and Fibonacci and the channel trading to the entries and the exits. So you can see there's one way. So you could have been sitting here watching, and again, these are close of candles, so you don't, this is a 4-hour chart, so you don't have to watch the chart all the time. At the end of the 4-hour period, you come and have a look. What is the state? Oh, it's crossed, and you enter on there, or you use a very good moving average automated tool, trading tool. And we'll talk about automation on a later stage. But that is this kind of way you use robots. You use them as automated tools that for things that you would do manually, like I've just shown you here. Rather automate that than and you'd only use it specifically for this particular task. So if the price is up there, you would activate the trading tool, and it would only work when it's actually closed over the moving average. Anyway, so moving averages is another thing we need to look at, and I'm going to just update our trading schedule. Okay, I've updated our schedule, and I'm just going to remove the moving average now, and let's start looking for other ways that you could have entered here. So now we start looking at support and resistance, and we say, all right, is there support and resistance that could have got us in there? So now channel trading is an element of support and resistance trading. Fibonacci is, but let's go and have a look at horizontal support and resistance. And horizontal support and resistance looks like that, and I'm just going to move that down and say, all right, how is that an important support and resistance area? So we look back and we say, there's already been a bounce over there, and then we look at, oh yes, there's been bounces on that, and there's been bounces on that. Now remember, a support and resistance is also not, as I described earlier, a region rather than a line. So it's not precisely a price measurement, it is a region. So that is close enough to say that it's a support and resistance line. Now, in order to see if it's further back, we just make the chart smaller and drag it to the left, And remember, there's what we're trying to explain. That's bounced there. It's definitely bounced there. There it came and bounced and was unhappy. There, can you see how it acted as support there? Let's look further. There, it acted as resistance. There, it was definitely support. So, you know, that's a reasonable area of support and resistance. So the next point we're going to look at is support and resistance, checking for that. And there's another point. I mean, we can say that we could have entered there because of support and resistance. And one of the points that we're going to get to is the confirmation point. So when you have a confluence of trading methods that say enter here, for instance, if Fibonacci tells you to enter there, if channel trading tells you, if horizontal support and resistance tells you, then there's a confluence of techniques, and that makes, if you look at it as a brick wall, it's 3 bricks that the price has to break through to get through there, and that's why it gets confirmed as a breaking point, and that could be why you would have entered there. Now, I just want to see if the exit was a support and resistance level, and I doubt if it was. It doesn't look like it was, but let's just see. All right, so there's the exit. No, there's a little bit over there, but there's no clear sign that this was an important support and resistance area. I think over there you could, yes, you see there's a resistance and there's support. There's a bit of, but it's not, oh, and there's actually quite a major bounce. So there's a major bounce, but there's a bit of nonsense going on here which says that it's not clearly a support and resistance. So although you need to look for support and resistance, in this case it doesn't help us as an exit method. So now we've looked at horizontal support and resistance as an alternative entry method. So let's get rid of those and move on, and we'll add them to the checklist. So let's increase the size again. Okay, there's our trade. Okay, so now we've established that is a possible entry, but that isn't an exit. Now the other thing that I would check for is trend lines, and trend line just needs 2 points, joining 2 points, and that's all. But because that turning point is the second point, it's invalid. So there is no trend line that one can draw there. But I'm just going to do the exit trend line to see if there's anything there, and there we are. So the exit trend line provides, or the exit trend line provides a good exit. Just look how almost perfect that exit is. So trend line in this case didn't help with the entry, but it did help with the exit. Okay, so we'll add trend lines to our checklist. That's what you need to do to check. So we've got quite a few confirmations for the exit area, and we've got quite a few confirmations for the entry area. We've got the moving average as possible ones, and let's now have a look at trend lines again, but microscopically. So what we'll do is we'll open it up a little bit more, like that. And that's the trade that we're trying to analyze, and we're going to say, all right, let's look at it microscopically. Now this is the 4 hour. What I would do, well, let's do it. I'm scared of it disappearing. It's the 3rd of March. Okay, so now I've drilled down to the 1 hour, and that's what I mean by microscopically, is now we're looking at support and resistance a little bit more, in a little bit more detail. So let's have a look, and if you had to draw trend lines here, that would be the trend line. The steeper the trend line, the more unreliable it is, but certainly that would provide an entry. So remember, we're saying this is more or less the entry area for this trade. I mean, this whole area here, and so a trend line entry over there selling would have actually got us in. So again, the trend line did produce a an entry. The other thing here that I've just seen now is there is an element of horizontal support and resistance. You can see how it's been sleeping on that line all the time, and so a break of that would also have got us in. Now I know it's gone the wrong way, but that's normal for a trading transaction, but certainly that would have got us in at a really good, if you bear in mind, let's just move this. There's our support and resistance. Let's say you've entered over there, it's gone bad, but it came back again. So there is a good entry that you could have done on a horizontal basis. So again, we're getting closer to different ways of entering. So horizontal, we can give it another tick. There's another entry that it could have had. And if you even go back, you see the 1 hour gives a lot more information. Let's just go. Oh yeah, that's most probably, if you look at this as a support and resistance area, that's definitely support, that's resistance, there's support, there's definitely support, and the break of that support, here's an alternative entry. So we found using horizontal support and resistance provided us with an alternative. And look at the long candle. So that's one way of catching a long candle. And when you see a long candle, one of the first things that I do is I actually go and look at the time of day, and it says 1900. Now 1900 is towards the end of the US session, so this is towards the end of the US session. Strange time for that to happen. There might have been a speech or something like that, but certainly a lot of movement at 1900. So okay, so and so that's another area that I'll look at is the time of day. What generally happens is that long candles on the whole happen during the open and the close of the US market or the UK market. So that's when the most volatility happens and these long candles break through. So that's why I check the time. That's another confirmation that if you see a signal and it's in the hot time, so the first 2 or 3 hours of the UK Open and the first 2 or 3 hours of the US Open, if it's then those hot times, then that signal is even confirmed even more. Okay, so let's have a look at some more possible trading signals that would have got us in. So let's have a look at momentum. And I'm going to go back to the 4 hour, just keep it. Okay, so there we are. Now momentum, again, I like using the RSI. You can use any momentum indicator, quite honestly, but the RSI has a lot of benefits to it. It shows divergences and all kinds of things a lot easier. So, and I also like the number 4, the 4 RSI, and why I like it is that it tends to go overbought and oversold all the time, whereas if you go smaller like 12, then the RSI doesn't actually get to the overbought and oversold regions, and the trading signals become fewer. So I'm going to add the RSI here, and let's just see what it tells us about that entry over there. So the RSI, I'm just going to do that. You see the candle there that I've got for the turning point on the RSI, and then I've got another turning point over there on that candle. So what we're saying on the price chart, the price is actually going up like that. Just show you the turning points again. See the turning point and the turning point. But on the RSI, it is making a divergence. In other words, what you're seeing up there is not shown at the bottom here. It's diverging in its picture, and that is often a signal that there's a good chance of a reversal. That's a reversal signal. It's not 100% guaranteed, but it does confirm the chance of a reversal. So the RSI is giving us a reversal signal there. When will we take it? We can either take it on the break of support and resistance at the top there. So we use a combination, use the RSI to show the divergence, you use support and resistance to enter the deal. Or you could take a trend line violation on the RSI, and you see there is no a trend line would be like that. That's too steep, so we'd have to take that one. The steeper the trend line, the more unreliable it is. And so it's saying on the RSI, the entry, oh, what's this yellow? The entry would be over there. Right, so there we are. So the RSI entry is over there, which is still sort of within 20 or 30% of the entry level, so all fine. So the entry is confirmed by the RSI. So by the time the price gets here, you've got a whole lot of confirmations that the price wants to go down. You've got all those bounces on support and resistance. You've got the channels, you've got the Fibonacci's, you've got all those kind of things. That's what I'm referring to when I say your confirmations start piling up on each other, and you start piling up the evidence for a sell more and more. So the RSI, I'll put it on the list, divergence and also trend line violation is a good signal. You can also take the 50 line violation, which would have got us in just that little bit earlier, but not further down. While we're here, let's have a look at the exit aspect of the RSI. Now this is a little bit clearer, this one, in fact. Now if you look again, if you look at the turning point at the bottom there and the turning point here, you'll see that there is a huge divergence. So it's something like that. This, I'm not going to, like that. It's going down quite strongly, and on the RSI, it's actually going up. So that's a huge divergence. So again, there's a confirmation that there is a strong likelihood of a reversal. So this would be for the next trade's entry, but it would also be the exit for the current trade, confirming that. And you could either get out straight away because it's already turned and that blue candle started going up, so you can get out on that blue candle, or you could do the same thing as what I've done with the previous one. You create a trend line violation on the RSI, and you then say, okay, well, let's get that RSI trend line violation lined up, and that's where you get out. So look how beautifully the RSI has got you out there. It's actually got you out on a candle when it's just turned. So that's why the RSI is a good entry technique and a good exit technique. On the whole, you shouldn't be using the RSI if it's making new highs and new lows, but in this case it's worked out quite well, and you need to use your own judgment as to whether how much reliance you want to put on there. But again, if this is a channel turning point, if this is Fibonacci turning point, you get your RSI, you get a divergence. Can you see how the evidence starts just piling up, and there's almost nowhere else for the price to go but the way the evidence is pointing. Okay, so now we've actually got the RSI nailed down as a potential signal for exiting and entering. All right, so we'll get rid of all the other things we don't need anymore. So I'll add the RSI as an entry and an exit one. So now let's have a look at a few other things. Okay, so one of the other things that people like looking at are are candlestick formations. So candlestick formations are good. They're a bit delayed, but they're good. And I'm not an expert at candlestick formation, but I think this is an engulfing candle. So in other words, the body of this candle is engulfing that previous candle complete. So that is a reversal signal, and you would then get in at the close of that particular candle, and you would trade. It's a reversal signal, so you trade down. The same thing applies to the bottom here. Can you see that the blue candle is engulfing the red one, and it can be regarded as an engulfing and reversal signal, and therefore that is an indication to trade north. So let's add candlesticks to our list, and before I forget all of this, because my memory is starting to go, I'm going to add them to the checklist. Okay, so the next one that I can think of, and I'm doing this out of my head, so I don't have a checklist myself, I'm making this up as I'm going along, are price patterns. Now, price patterns are things like double tops and triangles, head and shoulder formations, and that type of thing. So if we look at this transaction over there and that transaction over there, I can't really see any price formations. Now, if you don't see any price formations, sometimes it doesn't mean they're not there. Sometimes you have to drill down, and I'm going to do the same thing again, I'm pretty sure we won't see one, but I've got a suspicion that this could be a head and shoulders or a double bottom at some point, but let's just drill down to the 1 hour again. All right, so just looking at this particular area here, I can't see any price pattern as such. In fact, it's a really bad price pattern. One of the worst patterns you can get is what you call it's one of those loud hailer things that they used to use as a loudspeaker in the olden days. That's a diverging pattern, and it's not a good pattern, that particular one. So there is no particular pattern that I can see here. Let's have a look at the exit, and the exit also has no particular pattern that I can see there. Sort of a double bottom there or something like that, but I mean there's so many double bottoms, you can't take that as a reversal. So there's nothing all that much, although hang on, I've just seen something here. Let's have a look at this one. You've got to use your imagination, but there's the shoulder, there's the head, and there's the shoulder. Okay, so that's a reverse head and shoulder formation, and that's possibly a reversal formation, and you would enter on the break of the neckline, but you must probably enter on the close of that candle. But that's the closest I can see to a price formation. So that's something to bear in mind. Okay, let's have a look for any other ways of entering. Now, under a trend line and horizontal support and resistance, there are little subcategories like what we call ledging. So there's a ledge there, and there's a ledge there that would have got us into the trades. There's a ledge, and those kind of things I'm not going to cover in detail, but that's another thing that would have got you into trades. Even late in the transaction, there's still some ledging going on here. So ledging is just another way of using trend lines in a microscopic way. So that's almost a confirmation. You know, when we mentioned how to manage the trade when it's going, that's one of the things that signals that you can use to manage the trades. Are you seeing continuation signals or not? Okay, so I think that for this video, I think we've covered quite a lot of ground. I might have missed a lot of entry and exit opportunities here. Please, in the remarks columns or the comment columns, please let's get a discussion going on this particular video. And if you can spot anything else that I might have missed, please let's discuss it. Also, if you've got questions about anything that I did today, just ask them, and let's get some discussion going for the next video. In the next video, I'm going to be talking about the continuation options. Once we're in the deal, we've entered the deal here, we know we want to exit somewhere there. How are we going to stay in this deal, and what are the options? So that's the next video, and then we'll also be looking at some other trades, even trades like that, or even short-term trades like that. So we'll be covering quite a variety of trades. And for your information, here's the status of the trading checklist. I've listed all the entry techniques. We haven't looked at stops yet. All the entry techniques and all the exit techniques down there. So they're the same thing, because an entry for one is the exit of another, and so on. We're going to be building on this transactional management, and we'll start looking at some stop techniques in the next video. So from me, Alex Ploy, cheerio.